So today, obviously, non-farm payrolls Friday. The numbers I have up expected around 146. That was the anticipated number before we had all these terrible employment releases earlier this week. We had a very disappointing ADP report. We had a very disappointing employment component of the ISM report. And we had a very disappointing employment component of Chicago PMI as well. So really, if we get anywhere above 100, I would expect the market to have to consider that a good print. We should see some dollar strength, specifically against the yen. If we print anywhere near the 146 that's actually expected, I would expect a very strong dollar reaction. On the other hand, it's going to take a pretty disastrous print to disappoint the market, something similar to last month's 88,000. Very similar, actually, very similar setup in terms of the data from last month. Same thing, we're expecting around the 130 or so. And then we had disappointing employment data all week, and then we even managed to disappoint that by printing 88,000. So there is the potential for that to happen again, and if that is the case, we should see equity sell-off and the dollar sell-off at least initially before they sort of pick one or the other and kind of straighten out. So we're going to jump to the charts, look at a bunch of setups that we have, some for this week, mostly for next week, depending on how this plays out. But please take a moment to read the risk disclaimer, which should now be on your screen. If you're watching the recording, please take a moment to pause the recording and read the risk disclaimer. And then we'll get started. All right, so we're going to start with looking at the dollar index. Dollar index heavily weighted towards the euro, but there is still some value in it. You can see here we have put in a very significant rally here from 78.90 up to the 83.66 highs. Since then, we pulled back and traded this 50% fib almost to the pip. I think we fell short by just shy of 10 pips. And we respected that fib pretty well. So that's a fairly bullish development here for the dollar. It's a 4-hour chart. The holding this 50% fib, you would think, would suggest the pair managing to make a new high above those 83.66 highs. But that just means that 81.40 basically is the key resistance area. So still quite a ways to fall to get back, or key support area, sorry. So still quite a ways to fall to get back down towards that support area. But we are still well supported by the 50% fib. We do have some trendline resistance here if you just start connecting peaks. That comes in around 82.80. Just something to keep an eye on. Look at gold. Gold's still trading in this tight consolidation pattern here after that epic collapse that we saw back when? Earlier this month. Hey, Rob. So we've gotten a little bit, not quite, I'm still thinking 1540 would be a solid resistance area. We've started to flatten out a little bit here. We look at some fibs. We're trading below the 618 of this initial drop, but we draw it from the actual 1798 top. We still have a ways to go to get up to that 50% fib. It's around 1560, so that would be an area to keep an eye on for gold. On the other hand, if we continue to straighten out here and then roll over, I would expect new lows sooner rather than later. This entire move here from the 1321 lows to wherever we are now, around 1475, appears to be corrective to me and just in preparation for another big drop in gold. We'd really need to get above 1620 to release most of the bearish pressure on gold. Dollar yen. Trading kind of awkwardly lately. We still have this double top potential here, just shy of 100. All right. We do now have some trendline support right around 97.30. We're trading still, kind of recovering from that crazy price action we saw during the ECB decision. This is, oh, that's not right. I need this one. Sorry. You can see we've gone pretty much sideways since this major spike up from 97.15 to 98.40 in an hour. And since then, we've gone sideways. That is arguably some sort of bull flag. But with NFPs, it's only a bull flag if we get a dollar bullish reaction to NFPs. If not, it wasn't. NFPs have a way of sort of subverting most technical patterns pretty well. So keep your eye on dollar yen. Basically, keep your eye on this trend line below 97.20. We could open up a little bit more downside. Really, probably even down to as low as like 96. And then at 96, we should see some more consolidation. Kind of have to go from there. If this is a double top, I would say 96 is probably the neckline, and we should be able to, if we clear 96, we should be able to pull a move down to 93, maybe even 92. But we'll have to see what number we get here. But we'll also have to just see at what point the market gets tired of trying to buy up yen dips. At some point, it's going to. The question is just when. And until then, you're going to have a hard time having very successful longer-term dollar yen shorts. I mean, this is an absurd trend higher. Dollar yen is not one of the yen pairs setting up into a very clean pattern in either direction. Euro yen was setting up actually very nicely, and then we had all that chaos yesterday and kind of ruined everything. Right now, actually, though, I mean, if you want to just pretend that this entire 2 hours didn't happen, the major spike higher and the major drop lower, I don't think that's a terrible idea. And if so, you have a very nice long euro yen setup going on right now as we're retesting this trend line. We can see we respected it and we started to head higher. I would look for the pair to march back towards those 130 highs, well, not highs, but the 130 spike highs from the ECB report. That would be the first logical target, I think, for yen bulls. We already poked up above there, showing we can do it. So now we just need a more sustained move higher. Euro dollar. That's not a symbol. Euro dollar fading away here from 50% fib resistance. You can see this turned into like a head and shoulders pattern despite these spikes higher. Of course, it was pretty much untradeable because we just collapsed lower. But we're very close to a sort of a neckline retest area and 50% fib that we're falling back from. So again, if euro dollar continues lower from here on the back of NFPs, I would expect new lows below 130.40. Looking for this 129.60 sort of range bottom here. Keep in mind the bigger picture on euro dollar. We are trading at major 50% fib. We did wick above it before falling lower. You can see here, nice inverse hammer candle here at the 50% fib before a nice follow-through candle the next day. So there is some bearish pressure, you would say, in candlestick patterns building on euro dollar. So that means really a rally out towards 132 still looks bearish. We need to break and close above 132.20. That would relieve a good deal of the bearish pressure in the near term on euro dollar. Until that point, we consider this 50% fib as holding and sort of treat it accordingly. Pound dollar, similar. We have this nice ascending channel. We traded pretty well within it. We have this major 50% fib that we've tested, and now it looks like we're trying to roll over. Obviously, support's going to be the bottom of this channel, but more near-term support would be the bottom sort of this trendline area here, and resistance is there. So we are trading in sort of a medium-term, short-term triangle here on pound dollar. Look for 155.20 to get cleared to open up a move down to down towards 154.60. On the other hand, if we do break above this triangle, above 155.70, it should open up a move back towards that 50% fib at 156. And there we'll see whether or not we run into resistance around 156.04, 05 area on pound dollar. For those of you that like Nordic pairs, this is the 30-minute chart of dollar Swedish krona. We broke above descending triangle. We also held a 618% fib here on the daily. This is an hourly chart, but this is a major fib level that we held on a closing basis on daily. We retested the trend line. We respected it, trying to move higher. We'll see if it manages to succeed in that. This is equity futures, this is E-mini futures. Same deal as far as NFPs are concerned, God only knows, but from a technical standpoint, this is the world's clearest bull flag here on E-minis. So a positive risk reaction from NFPs should see us clear these 1595 highs, break 1600, and probably get to 1615 or so, 1610 or so, before the measured move completes, and then we'll see what we get from there. On the other hand, if we get a negative risk reaction, obviously we're just going to sell off, and it's not going to be a bull flag. Yeah, I don't know, Nick. That's a good question. Good NFP is good for dollar, good for risk. It will be good for the dollar. I think that's for sure. Whether or not it's good for risk, I don't know. Probably, but it's hard to tell. It's been really inconsistent lately. I mean, even like the last one, we had a terribly disappointing NFP report, and the dollar rallied against the yen, which doesn't make any sense. So it's been a lot harder to tell lately. Traditionally, it's good for the dollar, good for risk, and then usually risk fades a little bit as the dollar stays strong. A bad number will be bad for risk initially, and bad for the dollar, and then I suspect the dollar will strengthen throughout the day. So it's sort of hard to tell. Kind of have to play it by ear. Usually what works for NFPs is to fade the initial reaction. Whatever it does immediately, wait like an hour and then just do the opposite. It works pretty well. It's just been, with the quantitative easing being linked now to employment, we get really weird reactions from employment reports. So you see a headline number and everyone gets angry and sells off risk, and then everyone's like, well, that means that the Fed will keep buying assets so we can buy risk again. It's hard to say. You always have to sort of watch and see what decision the market makes today in terms of whether or not it's going to go up or down. Certainly, as far as risk is concerned, the S&P, the setup is there for just a gorgeous move higher. So that might give bulls a bit of an advantage because they have such a nice setup, but it's hard to say exactly for sure what's going to happen. Oil respecting these 94.50 highs, 94.55-ish, whatever. Still, this looks like a pretty clear bull flag, and it doesn't look like we're done here. I do think oil will be able to clear these 94.70 highs and move up into the 95.96 range probably today. Copper having a hell of a day today, up 4.5%. Of course, it was down about 4.5% yesterday. As that pair continues to just be a monster, or well, that commodity continues to just be a monster to try and trade. Usually when copper's doing well, it bodes well for risk. But again, with major data, it's hard to tell. Aussie dollar is hanging in there. It is holding these lows here, is 102.20 lows. Does need to get above this level here. This is the 50% fib here, just above 103 from this major decline. I do expect to see some resistance come in there, but if we can get above there and get back above this broken trend line, we should see that move back out towards 104.50. That's an if. We're at break even, so worst case scenario, get stopped out of break even. Ditto, Kiwi. Kiwi we're expecting 50% fib, right? Well, hang on, I gotta redraw it. It's not exactly correct. It's also upside down. Kiwi, there it is. Kiwi expecting a 6.18% fib right now. That was basically at these 85.34 level. We got to 85.30. Rolled over. Now it's just decision-making time. The market's going to force the issue higher. If so, we should eventually clear these 85.58, 85 levels and get higher. If not, could start to roll over and continue the downtrend for a move back towards 83.60. So it's kind of good that we're at such a key technical level for a lot of different pairs. Might mean that NFPs could actually be like significant lately. You can see this worked out really well actually. If you're watching that, we got a retest of this sort of quasi inverse head and shoulders neckline here before heading higher. That bolsters the bullish case for Kiwi a little bit. Again, nice clean technical patterns tend to trade pretty well. Dollar CAD, I haven't looked at dollar CAD in a while. We pulled through, dropped through this 50% fib before heading higher. Sort of put in a nice 3 wicks to the downside here and pushing higher. Could start to see a move back to the upside, but this is a very significant bearish move lower. Hard to make a convincing bullish case until we correct a little and hold. If we continue to fall on dollar CAD, watch parity. That will be the next major resistance level. It's right around that 6.18% fib. It's a major psychological level. You want to keep an eye on that for sure. That dip could be a very nice buying opportunity for longer-term dollar CAD bulls if we get it. So that's basically 1.0015 to parity would be the levels to keep an eye on there. Kiwi CAD, very nice. Respect of a fib level here, right off the 618 and higher. Still think that this pair is probably set to roll over in the near-term future, but I have to sort of figure out where, I guess. Right now, it's just shy of 50% fib. It's respecting a 38.2% fib, so a little bit higher to 86.53. We can start to see a correction start again on Kiwi CAD, but so are you saying if we get mixed data, like if we print like plus 140 or whatever we're supposed to, but the unemployment rate unexpectedly increases, that gets real complicated. Usually usually then that's definitely a fading situation. People usually initially react to the positive number, but then realize that that's not necessarily good if the unemployment rate picks up and it reverses. So I would expect if we get an increase in the unemployment rate, I would expect a negative reaction for risk and a positive reaction for the dollar. The pair that's going to be most effective if NFP is good or bad is going to be dollar yen. It's always dollar yen. That's the one constant. Which direction it's affected in, that's not constant anymore. It used to be that good went up and bad meant down. But that's not so much true anymore. But definitely the strongest reaction almost always, maybe like 95% of the time, comes from dollar yen. and I will we'll watch the release on my charts using dollar yen. Got about 4 minutes if you guys have any other questions. Questions, concerns, thoughts, pressing issues, moral quandaries? This is funny. Courtesy of David Rodriguez over at dailyeffects.com. The #1 ranked forecaster by Bloomberg is calling for 122,000, which is roughly what I think we're going to get. The second ranked person is calling for 180,000. So pretty much whatever number we get, we're probably going to get a dramatic reaction. When everyone is like thinking the same thing and we get that number, the reaction kind of sucks. But if no one knows what's going on, usually get a pretty good reaction either way. Shut up, Nick. Positively, of course. The only way Bryan Adams affects anything. I shudder to think what happens if the job print is 69,000 and Nick just spends the next 4 years singing Summer of '69 every time NFPs rolls around. We also have some other stuff going on is that the ECB's Nowotny was talking earlier today about the negative deposit rates and how he couldn't believe the market was reacted so strongly to the thought of negative deposit rates, and it's not going to happen anytime soon. And so that's the ECB talking down there, talking up, which they do, and it's really obnoxious. 20 seconds. Looking for 147.6. Pop goes the dollar yen. It's like the weasel, but lamer. I'm still waiting to see the number. 165 versus 140 expected. Wow. Unemployment rate ticks down unexpectedly to 7.5%. Monster beat. Wow. Considering everyone was all ready to crap all over this release, this is a big move for. I would expect this would not be one that I would fade. Especially not dollar yen. Don't sell dollar yen today. Dollar reacting positively across the board, unsurprisingly. Pound dollar breaking below that figure. Aussie to the upside. Your guess is as good as mine. Kiwi spiked lower, still holding higher. Probably means Aussie Kiwi's doing something weird. Aussie Kiwi spikes higher. Kiwi CAD diving, unsurprisingly. Aussie CAD will also be diving. Dollar CAD neutral. Dollar CAD's been real weird to trade around dollar data releases. Because it's so interlinked with the U.S. economy that it's actually started to have a stronger reaction to dollar news than the dollar has, which has been weird, but whatever. Euro yen, all yen pairs should be higher today. CAD yen especially, I would think, is doing pretty well. Yeah. Anything you guys want me to take a look at? It's a great labor participation rate unchanged. That's like neutral. It would be great to see the participation rate tick up. They also, yeah, actually, that's speaking of risk, Nick. That bull flag's in play. It's 16:10, probably sooner rather than later. 16:05 maybe. Uh, any questions or pairs you guys want me to take a look at? If you're going to go long dollar yen, wait for a pullback. Oil, and is that dollar CAD, Andrew? Yeah, okay. All right, so let's look at dollar yen. I'll point out some play if you want to buy dollar yen where you might want to think about doing that. Aussie Kiwi. All right. All right, so if you're going to look to buy dollar yen, don't do it right now. Wait for a pullback. Always wait for a pullback. You don't want to buy a 90 pip spike higher. Keep this fib on here and then just keep raising it. And if it ever pulls back to wherever the 50% fib is, buy it there. You might not get a trade today. It might not pull back to that 50% fib, but it does take the trade. And if it doesn't, sit the day out. It's not worth chasing it. Right now, we could see a 55 pip pullback in dollar yen still look bullish on a 30-minute time frame. And I just don't want to have an 80 pip stop for dollar yen when I don't know what my upside targets are going to be. So like right now we broke above where we're making a new high. So I'm just going to activate my fib. I'm going to draw it to match the new high. And then I'm just going to keep doing that. And if we ever get a pullback towards the 50%, or if I ever see a consolidation period on like a 5-minute chart, I might consider taking a long. Other than that, I'll probably just sit this one out. Let's look at oil, and then I'll look at dollar CAD for Andrew, and then I'll look at Aussie Kiwi for Maurice. All right, so like I said, oil busted higher. Look for a pullback to 94.70 if you want to try to get long. I'd also like to see a close up here first. Still got about a half hour till the 9 o'clock, 4 hour, 1 hour, half an hour, 15-minute close. So 9 o'clock, at 9 o'clock, I'd be watching to see where oil is, and if we're above 94.75, I like it to the long side. If we're below there, I would be hesitant in trading it in either direction. Yeah, same for all yen pairs, Raphael. Dollar CAD, I don't know for dollar CAD. If you want to look, 10090 is a 50% fib. We also have some horizontal chop resistant support here at 10086. Keep an eye on both of those levels. That's if you're looking to get long. If you're looking to get short, you could try a short here with stops at like 101.35, but I don't really like that trade at all. That's just a gambling trade. Dollar CAD's not reacting very strongly either way to this news, and I would be hesitant to trade it. I would rather look at other pairs. Like I said, the one place if we do get a massive dollar CAD sell-off today, which we're not going to get there, I don't think. No, we're definitely not going to get there. But if we did, when we do, and if we do get down towards this 618 fib here at 10015 towards parity, then I would consider a long. On the other hand, but otherwise, I'm going to need a lot more clear sort of short-term pattern on dollar CAD to trade it in either direction. Doesn't mean like I wouldn't trade other CAD crosses. Like I'd consider trying to get short Kiwi CAD relatively soon. Ditto Aussie CAD. But I would just avoid dollar CAD for now. And Aussie Kiwi. Same thing for Aussie Kiwi that we've been looking at forever. See, it feels like forever. Wait, if we can break this trend line and then break this horizontal resistance, we like it to the long side. Basically, like 121, about 30 pips higher. Should get us above that trend line. Then you look for a 4-hour close and then look higher. I wouldn't like to trade Aussie Kiwi on a Friday though. Depending on your broker, Aussie Kiwi can have really ridiculous spreads during periods of low liquidity. And Friday afternoon and Sunday evening when markets open are both periods of low liquidity. Spreads and low liquidity. So next week, I would like to look like Monday during the European session for Aussie Kiwi, this 121 level, 150 level. That's just me. And again, it depends on your broker. It wouldn't surprise me if some like Australian brokers had really good spreads on Aussie Kiwi. I just know that a lot of our European traders have a hard time with that pair. So that's just something to keep in mind. Other questions? I see Nick is typing, but I assume it's going to be. Oh, I thought you were going to ask something. I apologize for assuming that. Why is Aussie so strong? That's a terrific question. I do not know. Sorry, I don't have all the answers. I suspect some of it's just because it's been so beat up lately, and also it has really strong risk correlations. Really strong risk correlations, and so the fact that we see the S&P making new highs, I'm sure, is triggering some risk algos against the dollar and the yen. You can see, actually, this is an attractive trade, Raphael, that doesn't necessarily require a full 50 pullback long. Aussie, it does, actually, far away we are from the breakout point. This is a clean breakout here on Aussie yen. Next to 101 should be viewed as buying opportunity. Aussie yen for really the higher, much higher potential. So keep your eye on that. This looks like an inverse head and shoulders that we cleared line of. Nice higher. So eye on that potential as well. That's 101.25 to 101 on Aussie yen. Should we get it? Could be a nice long opportunity, really, even this afternoon. Don't forget that, like I said, the trend is to fade the initial move. Pairs, but I would not be hesitant to do it on dollar crosses. So I wouldn't really hesitate to buy the euro if I saw a nice setup, and I would the Aussie if I saw a nice setup. I mean, we're still long Aussie dollar and still break even, so change. But if you're not in that trade, you can keep your eye on the Aussie and see if it starts to show signs of reversal. It might not, especially with the way risk is going right now. Gold sold off a little bit. That's not overly surprising, but nothing too dramatic. Copper is continuing higher as well. Coffee, in case you're interested, looks like it's putting in a bull flag here on the hourly. I don't trade coffee. It's just there. That's a good question, Rob. I don't know the answer to that yet. We still have 8 hours until the close. Sort of depends on how they go. If they do rally throughout the day, I would expect at least partial profits. We'll take partial profits and maybe hold the remainder over the weekend. I also have to look. I don't know if we have anything expected over the weekend, news-wise. No. On Sunday, we have Aussie retail sales, but that's well after market open. So it sort of just depends on how it trades. Orange juice, not a good thing to trade ever. It doesn't look like. I've never actually looked at orange juice before, but this is what it looks like. Looks like a little head and shoulders getting put in here on orange juice. So if you're worried about your orange juice prices, they may be declining soon. No, we're at break even on both of them. And no, there's nothing over the weekend. No like surprise Chinese data or anything, so it shouldn't be anything concerning for those. We shouldn't see significant gaps this weekend, barring some sort of disaster in Europe, which you can never completely discount. Pound dollar appears to be continuing to sell off pretty hard here. That's interesting. Euro dollar starting to add to its sell-off. Aussie dollar starting to fade a little bit. Dollar yen. Gotta change this. Continuing higher again. So again, we'll activate our drawing, drag it to the new high, continue to wait. Not sure we'll see a pullback, and that's fine. I mean, if you don't, it's better to not take a trade than to lose on a trade. All right, any other questions from you guys today? Pairs you want me to look at? Philosophical debates you want me to address? Really, whatever you guys have in mind, happy to do it. uh, yes, they will. So, right, we still have some dollar data going on today. At 10 a.m., we have the ISM numbers and manufacturing or factory orders. A bad ISM will take a ding out of the risk on atmosphere, but considering how good the NFP print was, we might just sort of ignore ISM unless it's either really bad or really good. The market might just ride this headline number forever and sort of not pay attention to it. So it sort of depends on what the number is. But if it is significantly disappointing, then yeah, we should see. Actually, if it's very disappointing, that could spark our dollar yen sell-off back towards a place to get long. So 10 a.m. would be a good time to pay attention to. After like 11:30, I probably would stop paying attention to the markets and not look to take any trades until next week. Other questions, pairs, indices, commodities, other tradable instruments. This is the dollar index. Let's bump it out here. Really holding that 50% fib pretty well. This is a fairly constructive chart for the dollar. So keep your eyes on those euro-dollar pair, that euro-dollar pair. Also euro-Aussie. This was our chart of the day yesterday. We're challenging this channel again. Look. No, I don't think we'll go up all day at the S&P. I think we pull back by the end of the day. I think the S&P finishes green, but not that far above 1600. That's my prediction. I might be wrong, but that's my guess. Euro Aussie. Watch this. This is our chart of the day. You can find it in the chart of the day section of the website if you're interested. Holding the 6.8% fib well, we kind of have this big head and shoulders potential. And I'm looking if we get a daily close here below this sharp trend line support. Definitely looking to take a short and a longer term short too, further like 116 potential previous lows. So plus with the ECB just cutting rates, the roll, the carry just got a lot more attractive on Euro Aussie. So that's nice as well if it's a longer term sort of trade. Other questions? Pound Kiwi is really ugly. Euro Pound's pretty ugly. Euro Pound sitting on a 38.2% fib. If we do drop below 84, we could really see a pretty quick move towards 83 before perhaps higher. So keep your eye on that actually on Euro Pound. We are looking for longs, but we're looking for longs if we can break higher. This is sort of a descending wedge type pattern that you want to keep your eye on, but below 84 we could see a fairly sharp and quick sell-off, about 100 pips before potential rally back towards the 88 highs. Yeah, I agree. Is it is it rallying? Should I be looking at that pair right now? We're also getting a very nice. The other thing to keep in mind on Aussie Kiwi is that we're getting right now that daily candle like screams reversal potential right now. We need to close it obviously, but definitely want to keep an eye on that. If we can finish the day above 121 on Aussie Kiwi, that will be a great long trade next week, I think. But that's a big if. Maybe more like 121.10, as we kind of have this mess of an area as well. But definitely something you want to keep an eye on is Aussie Kiwi. It's not. I'm not longer term pretty bearish Aussie Kiwi, but this is getting pretty overdone. We could see a move back up, even just towards like 123 before lower would be enough to take some of the pressure off and open up further downside. But yeah, Aussie Kiwi is definitely a trade to keep an eye on going forward. Other questions, concerns? All right, if there are no more questions, I'm going to wrap it up. I'm going to have a morning digest to write and talk about this surprisingly good non-farm payrolls number. So go America. If you have any questions, I will obviously be in the chat room all day today. Or not all day. I'll be there till like noon. Thanks for joining me, guys. I really appreciate it. I hope you have a wonderful day and a wonderful weekend if I don't talk to you. Good luck, and thanks.